Hello and welcome to the 2-minute morning global interview series where we ask what's next and indeed what should be next in the global energy transition. I'm very glad to have Tim Mohammed with us today. He is the Executive Vice President and the Chief Sustainability Officer at 𝗗𝗶𝘀𝗀𝗺. Prior to this role, Tim was also the CEO of the Global Reporting Initiative, the world's largest ESG reporting standard, something that is extremely relevant today. Hi, Tim.
Hi, Michelle. It's so great to be with you today.
Thank you very, very much for joining us. So we're going to take a bit of a look back. Over the last 50 years or so, there have been around 2,000 academic studies that have been published, linking or trying to see if there is a link instead between financial performance and ESG. 60% have shown a positive correlation. I'm sure that number is going to surge in the next 5 to 10 years. I'd just be really interested to hear from you what you would say is the current state of play on ESG reporting standards. It's everywhere in our headlines. What's your take as somebody who's an expert in this field?
That's a great question, Michelle. You know, I've been in this field for decades now, and I have never seen it as dynamic as it is in 2021. It feels like the wind changed, the stars and the moon aligned, and now we're really seeing a lot of movement in what's been called ESG, or environmental, social, and governance. In fact, I saw an estimate from Bloomberg that the assets under management being viewed through an ESG lens will hit over 50 trillion US dollars by the end of this year. And that's just a stunning growth rate. I think the pandemic, as we just now are starting to come out of the pandemic, we hope, has really actually doubled down on ESG. Suddenly, sustainability issues, the issues of racial equality were thrust onto the scene and became much more important to companies and investors alike. And so we've seen a massive dynamism in ESG investing, and that has also moved markets. We're seeing changes in regulatory structures in the US, in Europe. We're seeing changes in the standard setters, in the international financial reporting standards. So a lot of change is coming, and I think smart companies need to be paying attention to what these changes might bring for their management systems.
Because the impact on a company's competitiveness is huge now, isn't it? Increasingly so. ESG credibility or ESG awareness is very much part of the partnership conversation, and a joint venture, a partnership, M&A as well. What's saying to companies, what's your stance on ESG? How advanced, how sophisticated is your status now? And that feeding into part of their overall competitive package. And you see that increasing a lot more as well.
I do, and you know, this is relatively new, and perhaps that's why things have changed so fast and are growing so fast. Just as a bit of a historical perspective, when I started in this field many years ago, it started with regulation. You know, we have to basically tell companies what to do. Command and control was kind of the operative phrase. Then it moved to reputation. And largely that's kind of where it's been for the last 20 years or so. Companies voluntarily disclose this information to bolster their brand value, their reputation. And that makes a lot of sense, and a lot of good has been done in that area. However, what's happening now is it's really moving into the regulation again. We're going back into financial disclosures that are mandated by governments, that have to be assured by accounting firms, and then presented to investors. And that's where things are really going. And the reason for that is because it's moved from the nice to do to the must do. All of a sudden, climate change, the #1 issue in the whole vast ESG arena, has risen to the top of everyone's list because it has financial implications for the future of corporate success. And that's why
over the last year, we've had a taste of what global instability feels like, and it has not been pleasant.
That's exactly right. And so I think investors, wise investors, are saying we need this information. It helps us make investment decisions. And frankly, what we have is not that good.
Indeed. And just talking about investments and financial decisions there as well, because there is the need for the investment in climate change adaptation approaches, and then there's the reality of climate financing, and they are two separate camps. Perhaps, perhaps they're not even on the same continent. The UN has put out some estimates saying that the need is around $300 billion a year, yet international financial flows to adaptation and resilience against climate mitigation are estimated around $30 billion per year. There's a huge gap, a mammoth gap that should get a lot of frown lines on our faces, really. So what would you like to see going forward? We've got another 9 months this year. Every single month counts in this push for 2050. It seems a long way away, but you'll zoom up pretty soon. What would you say must be done by the end of this year as a real push to get this positive momentum that's been building so well? How critical, for example, would you say data and transparency would play into that?
Yeah, so, as I mentioned before, I think there is a lot of cash inflow towards ESG investing, which is all great. But the missing element, to your point, to actually get things done is data. There's just a lack of good data in this market. And right now, unfortunately, there's also the high potential, if not the reality, of a lot of greenwashing. We have seen that. And the money that's flowing into ESG investments or green bonds, which are set to top 500 billion this year, is, where is it really being spent? Is it really helping the causes that it's intended to help? Or is it just sort of window dressing? And that's where data comes in. And Persephone has been at the forefront of trying to take what has been kind of let's just say, outdated methods of gathering this information and turn it into a real enterprise resource planning, or ERP system, as we have for financial systems, right? We've done this for years. We know how to do this. Now we need to take that same kind of technology, it is 2021 after all, and apply it to climate change so that companies can make wise decisions instead of just sort of ticking the box after the fact.
It's such an excellent idea. It does make you wonder why it hasn't been done for the last couple of decades, when this has been a major problem, why this hasn't grown alongside the market of ESG as well, why there hasn't been that big push. And now, of course, we've seen it over the last year. You just mentioned then in terms of technologies as well and data, which technologies do you see companies better using over the next couple of years to really get there? Would it be something more sophisticated, or do you think there are low-hanging fruits that can be installed for companies that want to make progress but perhaps don't have very deep pockets?
Yeah, it's again, fantastic question. I think where it's going is really two big categories. One is mitigating risk, which is all sorts of things about alternative energy efficiency, buying offsets, doing locally generated solar and wind and that kind of thing, all the way to, maximizing opportunities. I mean, when we really think about a low carbon future, what is that? That's about being more efficient. It's about having technologies that change the world so that we can do the same things and not use as much resource, decoupling growth from environmental degradation. I was listening to a podcast this morning that was talking about the advancement of flying taxis, that are basically running on electric power, getting over those terrible traffic jams that are blasting carbon into the atmosphere.
They're plaguing millions and millions of people.
Exactly. So this is the example I'm using for opportunity. Smart businesses, Persephone being one of them, are basically designing the technologies of the future. And these technologies will not only help address climate change, but they'll also bring wealth and jobs. And that's where I really see the future going.
And what's the sort of uptake and interest for working with technology companies that you're seeing? There may be an awareness in boardrooms, yes, this is no longer a box ticking exercise. This needs to be integrated more into our operational culture. But the next step, of course, is engaging externally. What sort of appetite have you seen?
It's just been explosive, especially in 2021, with the amount of money that's coming into the market looking for, these special purpose acquisition companies, or SPACs, and many of them are focused on the clean tech space. We're seeing a lot of interest from the investment community in clean tech or climate tech, which is where Persephone is. And we're just one piece of that. There's a lot of other different technologies in this broad category. And clients as well, so this has been a little bit more slow to come, but the investor pressure, we saw this from Larry Fink, the head of BlackRock, one of the largest asset managers on the planet, basically warning his portfolio companies to get in line with climate disclosure or they'll vote their shares against them. I mean, that's a pretty big deal.
Huge.
And so clients are now saying, okay, we must do something. We need better technologies to not only measure, but to manage our carbon output. And so the interest has just been explosive. It's a good place to be right now.
What markets are you seeing coming forward? Are there particular industries or sectors that are really reaching out to you? For example, the energy industry, how is that reacting specifically? Are you seeing other markets pushing forward as well?
Definitely oil and gas has been a leader in terms of interest from the large enterprise, but surprisingly, financial services, the investors themselves, have been our first clients. Our first named client was TPG, the fourth largest private equity firm. And why would a financial services company that doesn't generate its own greenhouse gas emissions come to us? Well, it's quote financed emissions. There's this new standard called the Partnership for Carbon Accounting Financials. I know this is all complicated terms, but basically—
Oh, this whole market is full of acronyms. It always has been.
Exactly. So hopefully bring a little clarity to that. But this is new. So it's helping investors, private equity, asset managers say how much of our money is resulting in what amount of carbon. It's an allocation procedure, essentially. And so this is new. And these clients have been coming to us and saying, help us with our daily deal flow. What is the carbon impact? What are our financed emissions? And
that sounds quite complex as well. It's not entirely like Scope 3, but quite complex in terms of understanding your supply chain.
It is, in fact, Scope 3. It's
if you want to get it's under the umbrella.
15, yes, it's part of Scope 3, and it gets very complex when you consider the amount of investment change on a daily, sometimes inter-day basis. How does this affect the financed emissions? And that's where—
and the global nature of it as well.
Exactly, and that's where you really need good technology that can basically take that deal flow, those transactions, and give you a sense of what's the carbon implication.
Are you seeing particular regions stepping forward with this? Because different countries, different parts in different countries have different levels of digital awareness and knowledge of the fourth industrial revolution and the tools, some of which will be getting used to generate hopefully clean data, which will generate sound results, is the idea, of course. Are you seeing particular countries really standing out in terms of their appetite to mature in this space?
From a regional standpoint, with all things sustainability, it's hard to argue that Europe always leads. And I think that's the case here as well. You have a lot of companies, investors that are sort of more progressive when it comes to these issues, and therefore they naturally tend to be early adopters. But the US is moving very, very quickly. You've probably followed some of this as the Biden administration has come in. We've seen some changes in the US Securities and Exchange Commission. They set up a work group to look at ESG disclosure. And if you're following this closely, it's pretty clear, at least in the near term, we're going to start to see more pressure, if not mandates, for this kind of disclosure in the US. I think another dark horse wild card, if you will, is Asia. The Chinese have been sending signals that they will too come forward with their own ESG standards. So this is all a rapidly evolving space, but that's kind of the way I would handicap it right now: Europe, US, Asia.
No, a snapshot's fantastic. Just from your perspective as well, you just touched on the Biden administration. I'd be really keen to know, has the acceleration since the seat in the White House was taken up by somebody else, has it been in keeping with what you would have hoped for? Has it been greater than what you'd hoped for?
It's way greater than what I would have hoped for. If you look at the team that President Biden has assembled, being led by Secretary of State, former Secretary of State John Kerry, former EPA Administrator Gina McCarthy, and others. It's the dream team. You know, this is the team that you field when climate change is at the top of your list. And it clearly is at the top of President Biden's list. In fact, he recently invited China and Russia to a summit to discuss climate change. So it's hit the top of the international agenda again, where it should be, heading into the 𝗗𝘶 meeting, the Conference of the Parties meeting in Scotland later this year.
And also, it's interesting that such a meeting of that gravity and that seniority is being called amid very much still amid a pandemic. That speaks even louder to the importance that's been placed on it before the 𝗗𝘶 event later this year. Just before we wrap up, you mentioned also just earlier about the growth of the green bonds market, and what used to be a much more niche area has become far more common. It's discussed more openly. People who perhaps aren't deeply involved in the market are now throwing numbers around, or throwing the words around, and because it's just become part of that climate vocabulary. Would you say that there are other markets in the field of green financing mechanisms that you would hope would make the same level of progress going forward? Sustainability linked loans and so on. Is there anything that you've got your eye on that you really think needs to excel?
You know, I think green bonds is a fantastic mechanism. It's growing very quickly, and it is the mechanism that I would answer your question with, because it needs to continue that growth trajectory. But the point I was making earlier is the take-home message. These investments, these loans, they need to be focused on meaningful projects that result in improvements in our battle against climate change. And oftentimes that's where the missing element is. It all sounds really good, and sometimes they produce even better returns than market returns, which is great, and not a day goes by that we don't hear another net zero commitment or a green bond fund. But what's really behind them is what matters. And, you know, the old phrase, Peter Drucker said, you know, what gets measured gets managed. And that's the core. That's the one we need to take away, is we need better data. It needs to be comparable. It needs to be quality. It needs to be reliable for investors. And that's the niche that we're trying to fill at Persephone.
Excellent. Tim, thank you very much for joining us. That's been very insightful. And I think we've covered quite a few areas on a good global footprint as well. Thank you very much.
Thank you, Michelle. It's been my pleasure to be with you today.
Thank you.